Hello everyone, in this video we would be continuing with the chapter number 4 of ACCA F2 Management Accounting, and the chapter's name is Accounting for Labor. Before watching this video, make sure to watch the part 1 of this chapter and then you can watch this. In case you haven't watched it, then I've linked it in the description box below. Also make sure to have a pencil, a notebook and the PDF with you. If not, you can just focus on the video, and you need to solve the questions along with me, and you need to have a calculator, otherwise you will not be able to understand anything. So let's just first quickly revise what we have seen in the part 1. So accounting for labor, we have been seeing how we are going to account for labor in our books. So we saw that there are time related systems and output related systems. Time related system basically focuses on how much time did the worker work for, and output related system focuses on how much output has been produced by the worker in a given period of time. These were the formulas. We saw what is a piecework system, and we also saw what is a differential piecework system. Differential piecework system and straight piecework system, the difference between both of them: straight piecework system means that the same amount is paid for each good no matter how many goods are produced, whereas the differential piecework system says that the until one particular limit the price of each good is the same. From that level onwards, then the price increases. And we saw what this is. This is the guaranteed minimum daily wage. That's why we have this straight line over here, since this amount is guaranteed. And then we have a normal piecework system. We saw what incentive schemes were, and we also saw what is the formula of bonus. The formula of bonus is time taken upon time allowed multiplied by time rate and time saved. And then we saw the illustrations. Now we are starting with the new concept, which is the direct and indirect labor. So what exactly is direct and indirect labor? Direct labor costs make up the part of the prime cost of the product. We have seen this in the previous product, that direct costs are always the prime cost and indirect costs will be the overheads, right? So what is a prime cost and what comes under prime cost? Basic pay of direct workers. So whenever we are talking about basic pay, keep in mind that basic pay is always the prime cost, okay? Direct workers are those employees who are directly involved in producing the output of the business. Indirect labor costs make up the part of the overheads. So we have already discussed this, that indirect costs are always the overheads and the direct costs are the prime cost and include the basic pay of the indirect workers. Indirect workers are those employees who are not directly involved in producing the output of the business. So who are not directly involved in the production. Let's talk about maintenance staff, factory supervisors, canteen staff. So these people are working for the firm, but they are not directly involved to the business operations. Indirect labor costs also include the following: bonus payments. So bonus payments come under indirect labor costs. Benefit contributions. Benefit contributions are the provident funds and so on. Idle time. So what is idle time? Let's take an example that the workers are willing to work and workers are present in the factory, but the machine breaks down. So that is not the workers' fault, right? They are repairing it. So it's not their fault. Even though during that time no production has been done, but it is not the workers' fault, right? So you have to still pay them basic pay for that time. So idle time is that time. Idle time is an indirect cost. So keep that in mind. Sick pay. Sick pay is indirect. Time spent by direct workers during doing indirect jobs. So when your machine breaks down, the direct workers are only repairing it, right? But repairing is not the prime business operation. So that will also come under your indirect labor costs. Test your understanding 3. Which one of the following should be classified as direct labor? Supervisor's salary, supervisor is indirect. Maintenance worker, again maintenance is indirect. Bricklayers in a house building company. So bricklayers are, what is the prime operation of the, what is the operational activity of a house company? Building only, right? So bricklayers are the direct laborers because that's their operation, that's their work. Wages of cleaning and housekeeping. So housekeeping and cleaning is my indirect cost. So my answer is C. Moving on to the next concept, which is the overtime and overtime premium. So what is overtime? Let's say that my shift is to work only 6 hours a day, but I worked for 8 hours in a day. So in that case, what really happens is that for the 6 hours I am paid my basic pay. For the rest 2 hours I am given overtime. Why? Because obviously I have spent more time in the factory, I have spent more time in the office, more than what was initially there in the contract, so I would be given overtime for that. Okay. So if employees are entitled to extra pay when hours in excess of contracted hours are worked, then they will be paid for overtime. When employees work overtime, they receive an overtime payment, which includes a basic pay and an overtime premium. Now, what is that? See, let's say that for an employee, the contractual hours are 6 hours a day. 6 hours a day. And for each, just a second. Okay. And for each day, he or she is paid, let's say, $2. $2 per hour. Now, the employee worked for 9 hours. The employee worked for 9 hours. So, how many extra hours did he work? 3 extra hours. So, how much will he paid? How much will he get paid? How much would be the overtime? See, let's say the overtime amount is $1. $1 is my overtime amount. So, what would be the amount which is paid to him? Is it 9 hours multiplied by $1? No. See, for the contractual hours, that is the 6 hours, you are anyway paying him multiplied by 2, which is the basic pay, which is 12, right? For the next 3 hours, you are paying the basic pay. Along with it, you are also paying your overtime. So that is plus 3 multiplied by 1. So this is the, let me just remove this. This is the flowchart. Overtime pay is 12, basic pay, direct labor cost, overtime premium is indirect labor cost. So basic pay is always your direct cost, but your overtime premium is your indirect cost. Overtime basic pay is again your direct cost, but your overtime premium, that $1 part, would be your indirect cost. But the basic pay part, even of the overtime, would be your direct cost. Okay. It is important that the overtime payment is analyzed correctly into direct and indirect costs. Basic pay, whether it relates to overtime or normal working hours, is always classified as a direct labor cost. Overtime premiums are usually classified as an indirect labor cost, but if the extra hours are at the specific request of a customer because they want the job to be finished as soon as possible, then they would be a direct labor. So if a customer has given a specific request, in such situations only your overtime premium can be your direct cost. Otherwise, generally overtime premiums are always your indirect cost. Employees who work night shifts or other antisocial hours may be entitled to a shift allowance or a shift premium. Shift premiums are similar to overtime premiums, where the extra amount paid above the basic rate is treated as an indirect labor cost. So whatever is the shift premium, that is similar to the overtime premium, the amount which is excess of the basic pay. So that would be treated as an indirect labor. Moving on. Viana is a direct labor employee who works a standard 35 hours per week and is paid a basic rate of 12 per hour. Overtime is paid at a time and a third. That means a time and a third is 1/3. In week 8, she worked 42 hours and received a 50 bonus. So we have to calculate the labor cost and state if it's direct or indirect. So let's begin with this. Let's first start with the basic pay. So how would you calculate the basic pay? You know how many hours she worked. She worked for 35 hours, that is given in the question. And for each hour you are paid $12. So for each hour it is 12. So that would give me $420. So the basic pay is for standard hours is $420, and this is my direct labor. We have discussed that. Next, basic pay for overtime hours. How many hours are the overtime hours? Overtime is paid at a time and a third. Okay, so since the basic rate is 12 per hour, overtime is a time and a third, which is 1 by 3, which is $4. So $4 is my overtime premium. I hope you're solving it along with me. Okay, so basic pay for overtime hours. How many hours did she work more? So let's see that. Standard hours is 35 hours and overtime is week. In week 8, she worked 42 hours. So she worked 42 hours instead of 35. So how many are my overtime hours? 42 minus 35, which is 7 hours. She worked 7 hours extra. So my basic pay would be 7 multiplied by, what is my basic amount? 12 per hour. 7 multiplied by 12. So that would be 84. So $84 would be my basic pay for overtime hours, and we know that this is direct. We have discussed that. Overtime premium would be 7 hours multiplied by $4. 7 multiplied by 4, which is 28, and 28 would be overtime premium, so that is indirect. We have discussed that also. And we have bonus. She received a bonus of 50, so that is directly given that 50 is the bonus, and bonus is always your indirect cost. I hope you're clear with this. Okay. A company operates a factory which employed 40 direct workers throughout the 4-week period just ended. Direct employees were paid at a basic rate of $4 per hour for a 38-hour week. Total hours of the direct workers in the 4-week period were 6528. Overtime, which is paid at a premium of 35%, is worked in order to meet general production requirements. Employee deductions total of 30% of gross wages. This we won't do anything of this. 188 hours were the idle hours. Calculate the direct and indirect costs for the 4-week period just ended. Okay, let's start doing this question. First, let's start with the basic pay. So my basic pay would be, how many workers are there? 40 workers multiplied by, what did I put, a 4-week period. Direct employees, 38-hour week, 4 weeks, 40 and 4 weeks. And how many hours in a week? 38 hours in a week. This is your standard hours, right? 40 multiplied by 4 weeks multiplied by 38. This would give you 6080 hours. This is your standard time. This much is the standard time. Total hours in the 4-week period was 6528. So 6528 they worked, but the standard hours are 6080. So what is the excess hours? That would be 6528 multiplied by 6080, 448. So 448 is my, just a second, 448 is my excess hours or my overtime hours. So this is my excess hours. Okay, and 188 hours of direct workers time were registered as idle. You know that the idle cost always comes in under indirect, so you are going to minus that from their direct thing. So what is the direct labor cost? 6080 hours plus your excess 448 hours, which will eventually give you 6528, minus the idle hours. 6528 minus idle hours, this would give you 6340 hours. 6340 hours. So this is your direct time multiplied by the basic pay, that is 4 per hour. 6340 multiplied by 4 would give you 25360. So your direct labor is 25360. Now let's come to indirect labor. Indirect labor would be overtime, that is 448 hours multiplied by the overtime. Overtime is 35% of your basic pay. So that is 35% of $4. That would give you your overtime premium. That is $1.4. $1.4 is your overtime premium. So 448 multiplied by 1.4 will give you your overtime premium, which is 627.2. Okay, Now idle hours will also be counted here. Idle hours would be 188 multiplied by your basic pay, which is 4. 188 multiplied by basic pay 752. So 752 plus 627.2 would give you 1379.2. Okay, we are done with this. I hope you understood how I did this. If you didn't understand, that's only because you did not solve it along with me. So make sure to solve it along with me. Okay. Accounting for labor costs. So how are we going to start with the accounting for the actual labor costs? Let's discuss that. Labor costs are recorded in an organization's SPL, which is the statement of profit and loss account, and we have read that in our F3. The labor account is debited with the labor costs incurred by an organization. The total labor costs are then analyzed into direct and indirect labor costs. So direct labor costs are credited from the labor account and debited in the work in progress. So whatever are your direct costs, whatever are your direct labor costs, they are debited to the work in progress account. Keep that in mind. Okay, direct labor is directly involved in production, right? So that's why we are debiting it to the work in progress account. What about indirect labor costs? Indirect labor costs are credited from the labor account and debited to the production overheads. We know that overheads means indirect, so indirect labor costs go to the overheads account. This is how your labor account would look like. This is my labor account, this is my debit, and this is my credit. What is bank? In bank, all sorts of payments to the labor will come here. All payments to the labor. So whatever you pay to the labor, everything will come here. From the bank, it is going out and labor is getting debit. Bank is getting credited because it is going out from bank. Now, what have you transferred to your work in progress? All the direct labor costs you have transferred to the VIP. And what are you transferring to production overheads? All the indirect labor costs you are transferring to the production overhead. And then you have the indirect labor, overtime premium, shift premium, sick pay, idle time. All this we have anyway discussed. Okay, let's read the notes. Labor costs incurred are paid out of the bank before they are analyzed further in the labor account. The majority of the labor costs incurred by a manufacturing organization are in respect of direct labor costs. Direct labor is directly involved in production and the cost incurred is transferred to the VIP account. Indirect labor costs include indirect labor, overtime premium, shift premium, sick pay, and idle time. All of these indirect labor costs are collected in the production overheads account. They are transferred there via a credit entry out of the labor account and debited to the production labor account. So I hope you are clear with this. Okay, let's start with our test your understanding 5. So what do we have to do over here? So we have been given all the information. We have the basic pay for direct workers, for indirect workers, for total overtime and everything. All this is given. We need to basically put them down in your labor account. So it is very simple. So this is your labor account. We need to put that. Pause the video and do it by yourself and then you can check it with me. Alright, let's first start with WIP. What is WIP? WIP is the work in progress which has all the direct costs. So let us add all that. So what all come on the direct? Basic pay for basic hours. This always comes in your direct. This always comes under your WIP, but you need to keep in mind. So direct workers 43,000, indirect will never come. So we are not going to look at the indirect. So WIP would be my 43,000 of only the direct workers, obviously. And what else? Basic pay of overtime is also your direct cost. So 10,000. So you are going to add your 10,000. So 43,000 plus 10,000 would be your WIP. So that would be 53,000. Next we have the overheads. What all come under overheads? Indirect. So basic pay of the indirect workers would come under your overheads. So overheads would be 17,000, which is your indirect workers, plus the overtime premium. Overtime premium would come under the below. If you remember the format, let's go back to the format. Overtime premium and everything will come here, so let's not worry about that. Let us see what will come. Indirect workers, basic pay and overtime premium of them. So that would be, overtime premium would come below, so we will not count that according to the format. So this would be 45,000 plus 17,000, 4,500. This would be my overhead, so 21,500. Okay, next we have the overtime premium. What is the overtime premium? Overtime premium would be 5,000 plus 2250, which is 7250. We are putting it as it is, and then we have the idle hours, training, sick pay, everything. So just go above and get the total and put it over here, and here we have the balancing figure, which is the bank, and it should get balanced. Okay, so let's just quickly revise. In your WIP, only the basic pay for direct workers and the overtime pay for direct workers would come. Indirect workers, basic pay and overtime would always come under your overheads, and again premium would always come as another separate column. See, it's that simple. Moving on, we have the labor turnover. Now this is a ratio. Labor turnover. So what is turnover? Turnover is when labor is leaving your firm, is quitting the jobs. So labor turnover is the measure of the proportion of the people who are leaving relative to the average number of people employed. So how do you find that? Let me go just a second. Where did it go? So number of the leavers who require replacement, how many people are leaving, divided by average number of employees multiplied by 100. Now one formula is not given, even though it's simple, it's not given in the book. What is average number of employees? So write it down. Average number of employees is the employees in the beginning plus employees in the end divided by 2. So this is the formula of your average employees, and then multiplied by 100 since it is a percentage. Okay. At 1st January, a company employed 3641 employees and at 31st December, the employees were this much. So starting period and ending period, both the figures are given. During the year, 624 employees chose to leave the company. What was the labor turnover rate of the year? So average number of employees would be in the starting plus ending divided by 2, which is this, we already know that. So labor turnover would be number of leavers, which is 624, divided by average number multiplied by 100. So this would give you 16.9%. Very simple. You just need to remember the formula. A company had 4,000 staff at the beginning. During the year, there was a major restructuring of the company, and 1,500 staff were made redundant, and 400 staff left the company. 400 new staff joined the company. Again, now, what is turnover? Turnover is when the people are leaving your firm on their own will and their own wish. It is their decision to leave your company. So that is not having something to do with us. But if you are making the employees redundant and if you are removing them, you will not be counting them in the turnover since they have not left by their own will. Okay, keep that in mind. Okay, let's start solving test understanding 6. Okay, number of staff in the beginning. Number of staff in the beginning would be 4,000. Number of staff in the end of the year would be 4,000. Okay, but I have removed 1,500 and 400 have left by themselves and new 400 have joined, right? That's what is given in the question. So that would give me 2500. So employee in the starting is this much, employee in the end is this much. So what is my average employee? Average employee starting is starting plus ending multiplied by 2. That would give me 3250 is my average employee. Now you have to put it down in the formula, which is now turnover divided by average employee multiplied by 100. So how much will come in turnover? How many people have left the company by their own will? So that is just 400. 400 people left the company. Other 1500 I'm not I'm not using in the turnover because those people we removed them. So 400 divided by your average inventory. What is your average inventory? 3250 multiplied by 100. So that would give you 12.3%. Okay, very simple. You just have to use the formula and use your mind, and always remember that in your labor turnover you will only include those people who have left the company by their own will and choice. Causes. Now what are the causes of labor turnover? Why does labor turnover happen in the first place? So it is important for us to try to identify why people are leaving the organization. You need to be aware and you need to know why is this situation happening in the first place, right? So what are some things which are avoidable? Poor remuneration. So if you are giving them low remuneration, then nobody will have the incentive to stay in your organization. So this is one thing which you can change in your organization. Poor working conditions. Again, if there is a bad working condition, why would somebody want to work? So that is also avoidable since you can change it. Lack of training opportunities, promotion prospect, bullying in the workplace. So these are the aspects which you can change. These are some things which can be avoidable. Now these are unavoidable. Retirement. So somebody has retired by the legal age. So obviously we can't do anything about it. Illness or death. So in such situations we really can't do anything. Family reasons like pregnancy and stuff like that. Reallocation. So relocation for unavoidable reasons. So these are some aspects which we cannot stop. Efficient managers will investigate high levels of labor turnover and aim to keep the turnover rate at a minimum. So it is very essential for us to look at the labor turnover and analyze the reasons as to why such a situation is occurring and why are people leaving the firm. Okay, next we come to costs. So whenever an employee leaves the organization, there are certain costs which have to be met by the company. These costs are known as replacement costs. What are they? Advertising cost. If you are advertising for new people to join your organization. Cost of selection. Like, you are spending so much time interviewing a person, reading their things. So you are spending a lot of time also training the new employees. So reduced efficiency until new employee reaches the skill levels. These are the kind of costs which has to be paid by the employer. A high labor turnover rate tends to lower the performance of employees who remain in the organization. Such employees may become restless and resentful of the extra burden of training new members and of additionally temporary duties imposed on them. Naturally, in order to keep the labor turnover rate to a minimum, organizations should aim to prevent employees from leaving, and you need to look at the preventive measures. Now, what are the preventive costs? If you are preventing labor turnover, what are the costs the company incurs in such situations? Pay competitive wages and salaries, improve poor working conditions, good training opportunities, promotion, stamp out bullying, investigate high labor. So these are the things. Okay, we are left with the last few formulas. Very, very simple, but let's just quickly finish this. Okay. Labor efficiency. So labor efficiency basically measures how efficient the labor is in doing the work, right? Labor is a significant cost in many organizations and it is important to continually measure the efficiency of the labor. The labor efficiency ratio measures the performance of the workforce by comparing the actual time taken to do a job with the expected standard time. The standard time is basically how long you need to be taking. Like, this is the time which usually you must be taking. So that is the standard time, which is a budget or according to the analysis. How long should it take? The labor efficiency ratio is calculated by standard hours for actual output divided by actual hours worked to produce the output. So standard hours are how much you should actually take, how much you should usually be taking, divided by how much you actually took multiplied by 100. This is the formula of labor efficiency. And let's come to idle time ratio. We have already discussed what is idle time, right? So idle hours multiplied by the total working hours divided by the total working hours multiplied by 100 gives you the idle time hours. Okay. Now we have the labor capacity ratio. What is labor capacity? So capacity is basically, it measures the number of hours spent actively working as a percentage of the total hours. So out of the total hours, how many hours has the worker actually spent in producing the output? That is going to be measured using the labor capacity ratio. Actual hours worked divided by the total budgeted hours multiplied by 100. This is the labor capacity ratio. Labor production volume ratio. Labor production volume ratio is known as activity ratio as well. So keep that in mind. Whenever there is a question on using activity ratio, find the values, you need to know that they are also meaning that it is the labor production volume ratio. So the labor production volume ratio compares the number of hours expected to be worked to produce actual output with the total hours available. That is basically standard hours for actual workers divided by total budgeted hours multiplied by 100. Total budgeted hours, what is the difference between standard hours and total budgeted hours? So standard hours is basically how much time usually people take to do this task, and budgeted hours is basically the maximum, like the ultimate maximum amount until how much time you can allow them to do it. Okay, so these are the formulas. There is no easy way, you need to be learning the formulas. In the end, make sure to note down all the formulas and learn them. If you know the formula, the questions are very simple. Okay, so a company budgets to make 800 units in 400 hours. Actual output during the period was 840, which took 410 hours to make. Calculate the labor efficiency, capacity and production volume ratios. Okay, first let's find out the standard hours. So what is the standard hours of 1 unit? For just a second. Okay, so for 800 units it is 400. So if I divide 800 by 400, I will get the standard hours for 1 unit. That would give you, so if I want to find out the hours required to manufacture 1 unit, that would be 400 divided by 800, right? So that is going to give you 0.5 hours per unit. Okay, till here I hope you understood. What is this? Okay, I hope you understood till here. We have done this part. Next, how many hours you are going to take for actual output? 840 units were made. So 840 units multiplied by 0.5 hours, because 0.5 hours per unit, that would give you 420 standard hours. Now you have the standard hours price per unit and the total standard hours. Let's start with the ratios. First is the labor efficiency, which is standard hours for actual output divided by actual hours worked multiplied by 100. So standard hours multiplied by actual hours taken, actual hours is given over here, multiplied by 100 would give you 102%. Labor capacity ratio, this is the formula. Actual hours worked would be again the 410 divided by total budgeted hours. In the question it is given company budgets 400 hours, right? So I hope you understood the difference between standard hours and the budgeted hours. Budgeted hours is given in the question. So actual hours is 410. They have taken 410 hours divided by budget hours multiplied by 100. This would give you 102.5. Production volume ratio or activity ratio. Standard hours, which is 420, we calculated divided by total budgeted hours multiplied by 100 would give you 105%. Very simple. See, if you know the formulas, then you got this. Now we are coming to an end of the chapter. Let's just quickly finish our test your understanding 7. A company budgets to make 40,000 units of product DOY in 4,000 hours in a year. So 4,000 hours is your budget right, to make 4,000. So how much is the standard? Okay. Actual output during the year were 38,000, which took 4180. Okay. So if you want to find the standard hours, this is my 0 0.1 hours. This is the standard time required to produce 1 unit, 0 0.1 hour. So actual output was this much, which took this much. So now let's find the standard hours. Standard hours are actually 38,000 multiplied by 0 0.1. 3800 should be your standard hours. Okay. Calculate the labor efficiency. Labor efficiency is standard hours. Look at the formula and do it. Standard hours, which is required, multiplied by actual hours worked, which is given in the question, multiplied by 100%. This is your 91%. Capacity ratio is actual hours worked. Actual hours is given in the question, which is 4180, divided by budgeted hours. Budgeted hours is 4,000 hours multiplied by 100. That would be 104.5%. Next we have the production volume ratio. Production volume ratio is standard hours, which we had calculated, divided by budgeted hours multiplied by 100%. This would give you 95%. So that's it. We are done with this chapter. Make sure to revise it and make sure to have a formula book where you are noting down all the formulas. And check the description box below if you wish to do other chapters. If you are somebody who is interested in stock market trading, specifically intraday trading, then make sure to check my other channel. This is my other channel. It's called Trade with Sao, and here I post content which is related to stock market. Make sure to check it out, and if you are an absolute beginner and if you have no idea about stock market, even you should check it out, because this can actually be a good source of income. I would also be linking the Trade with Sao channel in the description box below.